Thank you, Mr. Chairman. Good morning, Ranking Member Baucus, members of the committee. It's a privilege to be in this room again, testifying before you. We're debating important, consequential issues for the country. I welcome the attention you're bringing to it. I'm going to try to answer as many of your questions in my oral statement, but I'm sure we'll need to go over many. AIG highlights very broad failures of our financial system. Our regulatory system was not equipped to prevent the buildup of dangerous levels of risk. Compensation practice rewarded short-term profits over long-term financial stability, overwhelming the checks and balances in the system. We came into this crisis as a country, and this is a tragic thing. We came into this crisis without the authority and the tools necessary to contain the damage to the American economy posed by the very severe pressures working through the financial system. Now, I share the anger and frustration of the American people, not just about the compensation practice at AIG and in other parts of our system, but that our financial system permitted a scale of risk-taking that has caused grave damage to the lives of so many Americans. Financial institutions can pose risks as dangerous as those that led the United States to establish a full framework of tools for dealing with banks. We need to extend those protections and authorities to cover the risks posed by our more diverse and complicated financial system today. And we are proposing legislation to provide those tools and look forward to working with this committee and the Congress to pass such legislation as quickly as possible. The proposed resolution authority would allow the government to provide financial assistance to make loans to an institution, to purchase its obligations or assets, to assume or guarantee its liabilities, and purchase an equity interest. The U.S. government, as conservator or receiver, would have additional powers to sell or transfer the assets or liabilities of the institution in question, to renegotiate or repudiate the institution's contracts, and prevent certain financial contracts with the institution from being terminated on account of conservatorship or receivership. This proposed legislation would fill a significant void in the current financial services regulatory structure in respect to these large, complex institutions, and implementation will be modeled on the resolution authority that the FDIC has under current law with respect to banks.
Was failing, and the Secretary of the Treasury and the Chairman of the Federal Reserve.
My reaction upon becoming aware of these specific payments was that, notwithstanding the business purposes that might be served by this action, it was highly inappropriate to pay substantial bonuses to employees of a division that had been the primary source of AIG's collapse. I asked that the AIG FP payments be stopped, but was informed that they were mandated by contracts agreed to before the government's intervention. I then asked that suit be filed to prevent the payments. Legal staff counseled against this action on the grounds that Connecticut law provides for substantial punitive damages if the suit would fail. Legal action could thus have the perverse effect of doubling or tripling the financial benefits to the AIG FP employees.
Go ahead, Ms. Dudley.
Good morning. Chairman Frank, Ranking Member Baucus, and other members of the committee.